Testing, testing. welcome to the Public Service Commission's administrative meeting for October 29, 2025. First item is to approve the minutes of our meeting of October 22nd, 2025. Commissioner McLean.
Aye.
Commissioner Linton.
Aye.
Commissioner Sussman.
Aye.
Commissioner Barbay.
Aye.
I vote aye.
Good morning, Mr. Chair. Today there are 8 items on the agenda, and we'll start with the consent agenda where there's 2 items. The first is from the U.S. Department of Veterans Affairs. Its application for commission approval to construct a generating station pursuant to Public Utilities Article Section 7-207.1. And item number 2 is from Chaberton Solar Santa Rosa LLC. Its request for extension of Community Solar Pilot Program operational deadline for the Chaberton Solar Santa Rosa Solar Project in Montgomery County.
Okay, now I understand staff wants to make a comment about item 1, so.
Yes. Good morning, Chair and Commissioners. Charles Herbert on behalf of staff. Just one point of clarification with respect to the first item. The generators will be installed on land owned by the agency rather than leased.
I see. Oh, okay. All right. Any questions? All right. Okay, regarding item 1, I move we approve the application. Commissioner McLean.
Aye.
Commissioner Linton.
Aye.
Commissioner Sussman.
Aye.
Commissioner Barbay.
Aye.
I vote aye. And regarding item 2, I move we grant the requested waiver of Comar 20.62.03.04C and extend the operational deadline for the project to May 22nd, 2026. Commissioner McLean. Commissioner Linton.
Aye.
Commissioner Sussman.
Aye.
Commissioner Barbay.
Aye.
I vote aye.
Item number 3 on today's administrative agenda.
I had opposition number 2. I was told I'd have a chance to speak.
Oh, okay.
I gave full.
No. But so tell us who you are and what the issue is.
Certainly. Good morning. My name is Paul Garrett, and I'm a resident in the neighborhood where the Chaberton project is. I've lived there for 28 years. I walk my dog by this construction project every day. This is the second extension you've now granted to Chaberton, and I just wanted to give the commission a little color as to what's been going on in Chaberton. Chaberton is very good at proposing and lobbying and getting approval. What they're not good at is delivering on hard construction projects. Both of these delays have been self-imposed because they didn't order things correctly, okay? There's been no Montgomery County opposition. They tried to, in their filing here today, they tried to blame Montgomery County for the delays. It's Chaberton's own fault, okay? So I just wanted to make sure you are aware that they are not delivering on what they've promised. They've used all out-of-state construction workers, 0 jobs from Maryland. They've missed now 2 deadlines, and this pilot project has the potential to then be 2 more pilots because they bought adjacent properties to that. I have a map here I'd like to enter the record of our neighborhood. Is that okay?
Sure.
So project, well, I'll wait until I'm on the microphone.
Yeah. Actually, you can just give me
This
the
is the Potomac neighborhood here.
Okay.
There's one for the record.
and then that can-
Right. So as you may or may not know, Project Victoria was canceled, which Chaberton tried to sneak in adjacent to Santa Rosa here and create a large industrial solar farm here. Our neighborhood came together and blocked this, but if you keep extending this, it's an incentive to Chaberton to try and do more pilot projects in our neighborhood. These are $1 million homes. We pay a lot in taxes, and my neighbors and I are all very aligned and very opposed to any more. Now, Santa Rosa's built. You're probably going to connect it. I'm okay with that. However, there are these 2 subsequent properties that Chaberton wants to develop that I don't think it's fair for our neighborhood to have to incur that amount of additional construction. It's taken 3 years now here. If we get to the end of this, we're going to have 3 more years and 3 more years if we keep running pilots. So I'm here to tell you it's not all perfect on the ground when you put these solar farms into these residential neighborhoods. My neighbors and I, we are pro-solar, we are pro-nuclear, we are pro-gas. We need more power, so don't think this is all an anti-solar. This is really sticking a solar farm in a residential neighborhood is not the way to go. I'm happy to take questions. I wanted to go on the record that Chaberton has plans, we know this, to put more in our neighborhood. We have pictures, we have documentation. want it all on the record for you. I won't take up any more time. I appreciate you listening. Are there any questions?
Well, actually, let me do that part. So, any questions for Commissioner Sussman?
Okay, so first, thank you for coming.
Okay.
So in terms of the Santa Rosa project, you don't have a recommendation for us other than to deny the extension. I mean, we're sort of at the end of that,
I agree.
right, okay.
Yes.
So, but
And you already voted on it, so I'm not.
No, I appreciate that, but, so I encourage you to remain engaged in terms of the other projects and come to us earlier. Because it's hard for us to kind of come in at the last moment. We really appreciate you coming in, and we really want to hear from you and your neighbors. So to the extent that there are other projects that come in, please come to us earlier.
I agree with you, and we were
Okay.
on this, but you have to understand, for pilots, they don't have to come to you. Under 2 megawatts.
Okay, well, the pilots are done.
Okay.
So we're now in sort of permanent land. So if there are new projects that are coming and you and your neighbors are concerned, please come and talk to us. I encourage you to stay involved.
We will stay involved.
Okay.
Our understanding was if it was under 2 meg, they could still, with county approval, not have to come to the state, and they could sneak in a couple more little projects to get their 6 megawatts. Now, if that has changed or the pilots have been approved, then we missed that. That's our fault as neighbors. But we're just a bunch of neighbors. We're not represented by lobbyists the way Chaberton is. So it was our understanding that Montgomery County and that any developer, not just Chaberton, could get in an under 2 megawatt project, which I think is wrong because they're playing games with a bunch of little projects, little pilot projects, add up to a big project.
All right. So, just to sort of clarify things.
Okay.
So, the community solar process has been turned from a pilot into a permanent thing. That was done by the state legislature. So we're actually in the midst of developing the rules and regulations and policies that the developers are going to have to follow in order to do these projects. So I guess my suggestion is, why don't you talk to, so the guy standing there at the other podium
Okay.
is with our Office of Staff Counsel. And so he's worked with the technical staff. He can probably give you some information about where we are in that process of setting up the rules and regs for the community solar projects going forward, which is these ones that you're concerned about would be coming in under that. And he can also explain to you how to participate in the rulemakings and other things that we're doing on that. So,
Very fair. We tried on this one to get
No,
involved.
I understand.
And it's not easy
Yeah.
unless you're on this full time, watching this thing as a
I agree.
neighbor.
Yeah. So,
Okay.
okay. Well,
I said my piece. Thank you.
no,
very
no, that's
much.
fine. So, I mean, any response that you want to give, or
Staff in its comments noted his filing and just noted that this project is complete and
Right.
recommended approval.
okay, all right. So, anybody want to change their mind? No, I guess not. Okay, all right. Thank you very much.
Item number 3 on today's administrative agenda is from Baltimore Gas and Electric Company. It's calculation of the gas administrative charge under Rider 12 of BGE's gas service tariff.
Good morning, Chair Hoover, Commissioners. This is Mark Riley on behalf of staff. Rider 12 of BGE's tariff provides a detailed description of and calculation requirements for the gas administrative charge, GAC. The GAC recovers commodity-related costs by either adding a calculated amount or applying a calculated percentage to the following. Credit and collections, the expense amount is unchanged. Commodity billing charge amount is increased. The storage inventory carrying cost, the amount is decreased. The commodity cash working capital amount is increased. Uncollectible expense percentage is unchanged. Public Service Commission assessment has increased. In this filing, BGE seeks the Commission's approval to update the GAC charges. The GAC is required to reflect the approved test year amounts for various cost and revenue elements necessary to calculate the GAC components. Staff has reviewed BGE's calculation of the GAC and believes it is accurate and consistent with the requirements under the settlement in case number 8950, which requires BGE to file annual GAC updates and also to update after any changes in gas distribution base rates. Using the Rider 2 commodity price of 0.5186 dollars per therm for October 2025 and the updated GAC rates, an average residential heating customer using 55 therms per month will be charged approximately $1.05 per month, which is the same as the current period. Customers do not see GAC as a separate line item on their bills because the GAC charge is included as part of the gas commodity charge. Staff recommends the Commission accept the new GAC for filing effective November 1, 2025.
Okay, any questions for staff? Alrighty.
Good morning, Chair Hoover and Commissioners. Beverly Sikora on behalf of BGE. I have no comments about this filing. I do want to let Commissioner Suchman know that I did watch the admin meeting from 2 weeks ago, and I wholeheartedly agree that I owe Mr. Michel more than one, maybe two. So that will be forthcoming.
Well, and we'll be monitoring that to make sure that you meet the conditions.
I believe he may be here tomorrow, so you can ask him. I did bring some baklava back from Greece, so he will have that to start with.
Any questions for the company? All right, with that, I move we accept the new gas administrative charge for filing with an effective date of November 1, 2025. Commissioner McLean? Aye. Commissioner Linton?
Aye.
Commissioner Suchman?
Aye.
Commissioner Barbe?
Aye.
I vote aye.
Item number 4 on today's administrative agenda is from Arcadia Power, Inc. Its request to qualify Rossville as an LMI subscriber under Maryland's Community Solar Program.
Thank you. Good morning, Chair and Commissioners. If possible, I was hoping to have all 3 items filed by Arcadia heard at once. So on September 9th, 2025, Arcadia Power LLC filed a request to qualify 3 nursing home facilities in Rossville, Roland Park, and Towson as low-income subscribers in Maryland's Community Solar Program. The properties are each Medicaid service providers, evidenced by approval letters from the Maryland Department of Health. Under COMAR 2062-0303D3, a multifamily dwelling unit may apply to the Commission to qualify as an LMI subscriber if they do not have an active contract under one of the programs listed under COMAR 2062-0303D2. The nursing homes are requesting to qualify as LMI subscribers in the program on the basis that they are Medicaid providers. Staff believes that this would be an acceptable basis to qualify the nursing home units. Medicaid is listed as a qualified program for LMI eligibility under COMAR 2062-0303D1, as well as PUA 7-306.2 F14. Additionally, staff is not concerned that less than 100% of the residents are Medicaid recipients. In previous matters of this nature, the Commission has qualified multi-unit dwellings as low-income subscribers for community solar when the properties housed less than 50% of residents who were enrolled in a qualifying program. Accordingly, staff recommends that the Commission approve Rossville SNF operations, Roland Park SNF operations, and Towson SNF operations as low-income subscribers in the Maryland Community Solar Program. Thank you, and I'm available for questions.
So, any questions? All righty.
Good morning, Chairman, Commissioners. Eric Wallace with the law firm Green Herlocker on behalf of Arcadia. We appreciate staff's review and comments here. Don't have anything further to add at this point, but available to answer any questions the Commissioners may have.
Okay. So any questions for Arcadia? All right. So I actually think we got to take them one by one. So So I move that we approve the Rossville SNF Operations LLC as a low-income subscriber in Maryland's Community Solar Program. Commissioner McLean.
Aye.
Commissioner Linton.
Aye.
Commissioner Sushman.
Aye.
Commissioner Barbe.
Aye.
I vote aye. I move we approve Roland Park SNF Operations LLC as a low-income subscriber in Maryland's Community Solar Program. Commissioner McLean.
Aye.
Commissioner Linton.
Aye.
Commissioner Sushman.
Aye.
Commissioner Barbe.
Aye.
I vote aye. And then I move we approve Towson SNF Operations LLC as a low-income subscriber in Maryland's Community Solar Program. Commissioner McLean.
Aye.
Commissioner Linton.
Aye.
Commissioner Sushman.
Aye.
Commissioner Barbe.
Aye.
I vote aye.
Item number 7 on today's administrative agenda is from Maryland American Water Company, American Waterworks Company, Inc., and Maryland Water Services, Inc., Nexus Regulated Utilities, LLC. Its joint application for approval of transfer of controlling interest and franchise transfer.
Good morning, Chair Hoover and Commissioners. Jennifer Purvis, presenting on behalf of staff. On May 30th, 2025, the applicants, Maryland American Water Company, American Waterworks Company, Inc., Maryland Water Service, Inc., and Nexus Regulated Utilities, LLC, filed a joint application for approval of transfer of controlling interest and franchise transfer, which I will collectively refer to as the transaction. American Waterworks is the parent company of Maryland American Water, and Nexus Regulated Utilities, or Nexus, is the parent of Maryland Water Service. If approved, Maryland Water Service would merge with and into Maryland American Water, with Maryland American Water remaining as the surviving entity. Maryland Water Service would cease to exist, and all Maryland Water Service assets, contractual obligations and liabilities, including Maryland Water Service franchises, would vest in Maryland American Water. Maryland American Water would then be responsible for the provision of the water and sewage disposal services currently provided by Maryland Water Service. The Virginia State Corporation Commission and the Kentucky Public Service Commission have already approved American Waterworks' acquisition of the Nexus subsidiaries in those states. Joint applications for approval of American Waterworks' purchases of Nexus subsidiaries are also currently pending in New Jersey, Pennsylvania, Illinois, Tennessee, and Indiana. After review, staff finds that the applicants have satisfied all applicable requirements of sections 5-203C, 6-101C3, 6-101C42, 5-205A, and 5-202 of the Public Utilities article, as well as Comar 20.7.04.04 and 20.07.04.05. Staff finds that American Waterworks and Maryland American Water possess the financial and managerial qualifications necessary to take control of Maryland Water Service. Staff notes in particular that Maryland American Water's retention of Maryland Water Service employees will help provide Maryland American Water with expertise, continuity of management, and institutional knowledge of the Maryland Water Service systems. Staff finds no concerns with respect to complaints against either Maryland American Water or Maryland Water Service, and that Maryland Water Service customers will be provided with adequate notice of the change in water and wastewater providers, as well as with information pertinent to that transition. In addition, after completion of the transaction, staff has confirmed that Maryland Water Service customers will experience no change in their rates or charges for water and sewage disposal service until such time as Maryland American Water files its next application to revise rates. Maryland American Water also stated in its response to staff data requests that it does not plan to seek recovery of the costs incurred to acquire Maryland Water Service. Maryland also notes that the Maryland Water Service systems will not be part of the Maryland American Water rate case currently pending before the Commission in case number 9808. Finally, staff notes that Harford County Executive Robert G. Casserly filed a letter with the Commission in support of the transaction, stating that it, quote, is in the best interest of the communities served both in terms of water service reliability and long-term infrastructure investment, end quote. Accordingly, staff finds that the proposed transaction is consistent with the public convenience and necessity and recommends that the Commission grant approval of the transfer of controlling interest and franchise transfer from Maryland Water Service to Maryland American Water, as described in the instant filing and responses to staff data requests. Staff notes that the Office of People's Counsel filed comments on this matter, and Maryland American Water has filed a response. Staff does not share OPC's concerns, does not agree with OPC's assertions, and believes that what OPC is seeking could actually increase rates for customers. With that, staff is available to answer any questions you may have.
Okay, so actually, before we get to that, sort of a process question. There was, in some of the filings, there was confidential information included. And I guess I'd want to hear from, I guess, staff, OPC, and the company, exactly what is confidential and can't be, talked about in our open meeting. So I don't know, whoever
It's
wants
mostly
to.
a question for the company.
All right, yeah.
Good morning, Chair Hoover, Commissioners. Let me just get oriented here.
Sure. No, take your time. We just don't want to, say anything that, that we
Yeah,
can take back. So.
I think the key confidential information here in OPC's letter is the current book value of MWS, and then they also marked as confidential sort of their conclusion as to what moving away from the current book value to the purchase price for rate base would do to rates. So, I mean, that's what's been marked confidential, but I think we could avoid that and still have the discussion without much issue.
Okay, all right.
You agree?
Okay, so any questions for staff?
Chair Hoover, could I just interject? I mean, we marked confidential what we did because the company had marked it confidential.
Right.
And again, the only piece of confidential information that's cited in our letter is the book value.
Okay.
I believe, that number, while not stated explicitly, is actually implicit in the letter that the companies filed yesterday. Because it's essentially the difference between the purchase price and this sort of goodwill intangible asset that they're proposing to record. So in that respect, I mean, we are planning to cite in our comments that arithmetic. And I guess it's a question for the company about, whether there's a material difference between citing that based on what they filed publicly yesterday and citing what they marked as confidential in their previous filings.
I had an opportunity to confer with my client. We're fine talking about book value and OPC's assertions about what it would do to rate base to go to the purchase price.
Okay, fair enough. So, questions first for staff. Commissioner Barbe.
Yeah, thank you, Mr. Chairman. So, as in most mergers and acquisitions, the assets and liabilities of all of these companies are being combined. But is anything being added or subtracted to the value of the company as a result of the combination?
I could let Dave Valcarengi speak more to that, but I do not believe so. That might be more a question also for the company to answer.
I mean, if anybody knows the answer to that,
We'll go ahead and let David take a first crack at it, and then we'll.
So in this transaction, Maryland American is acquiring the NWS independent affiliates. So on day 2, if you approve this transaction, all of the assets and liabilities that are on the books of MWS will become Maryland American assets. The value of those assets won't change.
okay, so in the combination, it's going to have the effect of just adding up everything these companies had separately without causing some sort of an addition or subtraction. It'll be the same.
Right. On day 2, should you approve the acquisition, the assets will be recorded at the same value as they are today.
Okay. All right. Well, I will have a question for the
Yeah,
company
yeah,
whenever
okay.
it's appropriate to
And we'll
do
get to that. So.
Okay.
Commissioner.
Thank you.
Okay, so one of the reasons why in your buck sheet why you support the merger is that, and I'm looking at page 18 of your buck sheet. that the MSW rates and charges will be assessed will not change as part of the merger of the two companies. And as you testified, there's a current rate case, and this company is not going to be part of that. Is that correct? Now,
Right.
how can you? So I think some of the arguments that OPC is making is that the purchase price is so substantially higher than current book value that it's inevitable that at some point they're going to come back to us and ask for a rate increase. So explain to me why we shouldn't worry about that.
The additional value is goodwill. The goodwill will not translate into the value of the assets that Maryland American records for the MWS independent affiliate systems, if that makes sense. So no change. Will there be a change in the rates moving forward? Potentially, as MWS builds and fosters, or excuse me, as MWC goes about its typical operation of the systems, there may be a change in the rates that customer sees, but it won't be in regard to this transaction, because all of the fees and so forth are not going to be charged to customers.
And we know this because I guess what I'm trying to understand is because there's a large difference between book value and what's being paid, and you're telling me that differential is goodwill.
That differential is goodwill. The assets.
Okay, but I mean, whether it's goodwill or not, if you're paying nearly twice what book value is, you're going to have some method for cost recovery. Seems to me natural that it'll be ratepayers that'll be paying that.
No, I don't see that. And typically, if I don't share that view, but that's something that could potentially occur in the next rate case. As I said before, the assets that are in place today will be the same value will be placed on those assets tomorrow. So all that goodwill potentially from this transaction will not be recovered from the customers in the three different systems.
Where are they gonna? If you, I guess I'm not really understanding. So maybe you have to work a little harder then. If you have book value and then you sell it for twice book value, and you're still charging your customers the same rate, where's the cost recovery coming from? I mean, maybe I'm just not understanding.
Well, potentially, if they decide to recover it, it would have to be from their inherent shareholders.
They're gonna recover the twice book value from shareholders? Because that's usually not what happens. Usually what happens when a utility purchases an asset is that they seek cost recovery from ratepayers, not from their shareholders.
Well, that's if the underlying assets and the fees are assessed to consumers of those independent systems. Here we know that, at least on the record, Maryland American is stating that they're not changing the value of the assets and they're not seeking to recover the cost of the transaction.
Okay, I guess I would feel comfortable if there was a commitment from the company that the rates charged to the MWS customers wouldn't change for 10 years, 5 years. I mean, I think the problem is that I'm not comfortable with the assurances I'm getting from you that these rates are not going to change.
I don't know that you can place essentially a moratorium
Well, it's not a moratorium, it's a commitment. I mean, I'm not suggesting that the commission would do that. I just am saying I would feel, I'm not really understanding when you're paying substantially higher than book value, that there's not going to be a subsequent effort to recover costs from ratepayers.
Obviously, American Water and Maryland American sees the value of these systems, and the goodwill will be recovered over time in through the ordinary course of business, but not through the rates that customers pay.
Okay, well,
water and or wastewater.
No, I understand. So Mr. Bugelmans, when you sort of present, maybe you can respond to my concerns and explain why I don't need to worry about ratepayers.
Typically what happens, if there is goodwill, it's recorded for financial statement purposes and amortized over some period, but it is not, unless there is some demonstrable benefit that consumers are receiving, it's not reflected for rate-making purposes.
Okay. I mean, if I can have some assurances that rates won't be affected, then I have much less concern. So that's all I have.
Commissioner McLean.
Mr. Valcarengi, in the next rate case for Maryland American, the rates could be affected by this transaction, though, but it won't be as a result of the goodwill. Is that?
This transaction won't have an impact on the underlying rates. Now,
Right, I'm talking in the next rate
in
case.
the future,
Sure.
you may see an impact on rates just through the ordinary course of business. They buy assets, the cost of expenses go up. So just the ordinary course of business could cause rates to go up. But this transaction alone should not impact the rates that consumers see.
Thank you.
Commissioner Lynn.
Yeah, thank you, Mr. Chairman. Good morning. Would staff be, or did staff discuss with Maryland American Water the possibility of a post-closing compliance filing that would confirm that there were no impacts from the goodwill? Or if you didn't discuss it, would you be supportive of that idea?
We didn't discuss it in that fashion. We discussed there was a proffer that there's not going to be a change in rates and they're not going to recover the fees of the transaction from consumers in Maryland. Now, if the commission feels comfortable, what do I call it, making or ensuring that there's some sort of bona fide commitment from the company that they won't seek to recover goodwill or any other charge, staff does not have a problem with something like that.
Okay. All right, well, we'll ask the company when it's their turn. Thank you. Thank you, Mr. Chairman.
Okay, so let me now turn to OPC.
Good morning, Chair Hoover, Commissioners. Mark Shebus for the Office of People's Counsel. I want to first say that we were happy to read in yesterday's filing by the companies that if the Commission should approve this transaction, they're planning to record the depreciated original cost of the company as rate base rather than the purchase price of $39 million. That would satisfy our main concern in this case, namely that the transaction by itself would lead to a significant increase in rate base, which would in turn lead to significant increases in customer rates. The problem is that the law as we read it, and the law here is Title III, Subtitle 6 of the Public Utilities article, appears to require that the purchase price becomes the rate base. And in response to staff's comment that what OPC is advocating would harm customers, we're trying to do the opposite. We are reading the law as we see it. Our interpretation is a plain language interpretation, and I'll get to that specific language in a bit. But even if the law does not require that result, we are concerned about the long-term impact concerning a $39 billion purchase price because of this intangible asset the goodwill of $17.8 million. We are concerned that, we heard Mr. Valcarengi just testify, and again, I'll get to this later, but I think there is some level of uncertainty about what the effect of that asset will have on the company's books. Now, the company's confirmed in yesterday's filing that the amount that they're planning to pay, $39 million, is significantly higher than the book value, leading to this difference of $17.8 million. And under accounting rules, that goodwill has to be classified as an intangible asset. But again, we're not clear about what the long-term practical impacts of that will be. And given that the companies, the combined utilities, Maryland Water Service, have fewer than 5,000 customers, and that's if you assume that the wastewater customers are entirely separate from the water customers. If they're not, and probably they're not, and it's closer to 4,000, it's hard to see how you get to a goodwill of $17.8 million, which is nearly the book value of the company itself. Now, I want to come back to these points, and so like that, the methodology that the company has used to come up with this $39 million figure, which we discussed in our comments, really gives us pause and should give the commission pause as well. I'm going to come back to these points in a couple of minutes, but first we just want to pull back and sort of talk about the sort of larger context here with this company, with Maryland Water Service. As far as we can tell, it was created in the 1990s. For a long period of time, it had Pinto and Highland Estates as the two sort of constituent utilities. For a long period, it was owned by an Illinois corporation called Utilities, Inc. In 2012, Utilities, Inc. was indirectly acquired by a company called Corix Infrastructure. In 2021, two additional utilities, small utilities owned by Utilities, Inc., Provinces Utilities and Green Ridge, were transferred to MWS. In November of 2022, Corix initiated a merger with Southwest Water Company, which was finalized in April 2024, and which the Commission approved for Maryland purposes. And then the ink had barely dried on that transaction when the merger and transaction that's before the Commission now was approved or proposed. And just on Monday, the day we filed our letter, American Water issued a press release announcing that they plan to merge with another large utility water holding company called Essential, which would make it by far, American Water is already the largest investor-owned water utility in the country, and this would significantly increase its size. Now, I provide that history because all of these transactions come with expectations of growth and profit. And I think what we've been seeing with respect to MWS's customers is the ramifications of that. Staff lays out in its buck sheet how much rates for MWS's customers have risen since the last rate case. It's significant. And although there have not been many non-rate related complaints, as staff discussed, there have been quite a few complaints about how high the water bills are, which is not to say that those bills are not correlated with infrastructure investments, but nonetheless, rates are going up significantly, and we're concerned, and the Commission should be concerned about the effect of this transaction on rates further. So obviously the Commission can't determine what happens in the C-suites with respect to decisions about mergers and acquisitions, but the Commission can and must carefully scrutinize transactions like this. So we appreciate the Commission's attention to this issue. And again, the core issue here is the applicability of Title VI, Subtitle 3. And I'm going to read Section 6302, which is the section that we believe makes...
Just hold up one sec, Phil, because
Sure.
somebody wants to...
Well, I'd like to hear.
No, he
I
will. I just want her...
I just wanted to find it. Okay, go
so she
ahead.
just-
Yep.
Okay.
And this is Section 6302, applicability of subtitle. The subtitle itself have another name. This subtitle applies to the sale and acquisition, including all tangible assets, of public and private water service providers and sewage disposal service providers with fewer than 400,000 customers, period. We don't think there's any doubt that This is a transaction concerning utility with fewer than 400,000 customers. Again, it is less than 5,000. And I don't know how you can look at the plain language of the statute and conclude that this subtitle does not apply. The company's position is that the entire subtitle does not apply because the companies did not elect to use the process laid out in Section 6304, determining fair market value of the selling utility. We agreed that this provision is not mandatory. It's something that companies can elect or not. But the decision to elect it or not does not determine the applicability of the entire subtitle. It's an entirely different legal question. And we don't see anything in the law that says if you don't adopt this valuation process, the rest of the statutes in the subtitle do not apply. The subtitle, or the particular statute that sort of was the impetus for our filing the comment letter, is 6306, rate making rate base. Section 6306B says, as of the closing date of the acquisition, the rate making rate base of the selling utility, including additions under subsection A, which are not relevant for this discussion exactly, shall be the lesser of 1, the purchase price negotiated by the acquiring entity and selling utility, or 2, the fair market value of the selling utility. And the statute in the definition section defines fair market value as what is derived through the appraisal process laid out in Section 6304. Now, when a company does not elect to use 6304, we are left with only the purchase price. And as we read the statute, in that situation, the purchase price becomes the rate base following the transaction. Now, the company disagrees, and again, we appreciate that. But obviously, the company doesn't get to decide whether the law applies or not. That's a decision for the commission. And again, as we read this statute, applying to the transaction as it's been laid out with the current purchase price, the statute appears to require that the rate base of MWS following the transaction would be $39 million. So that's our main concern. Again, if the company is saying that they're going to record the depreciated original cost as the rate base, that's great. But the question is whether the law permits that, given that that's what the company is proposing to do. I want to come back to this sort of goodwill, the difference between the book value of the company and the purchase price of $39 million. And again, the $39 million, that purchase price was derived by totaling the book values of all the Nexus utilities that are being acquired by American Water, and then sort of divvying up that total pro rata among the companies. The problem with that is that total amount, $350 million, had to come from somewhere. Where did it come from, if not from the addition of discrete valuations of those additional companies? And if that's the case, then why this additional step of sort of applying this pro rata methodology rather than whatever methodology was used to come up with the $315 million in the first place? In any case, the result of the application of this methodology is a purchase price of $39 million, which, based on what the companies filed yesterday, is a significant difference from the book value. If you take $39.3 million and subtract 17.8, which is the goodwill that they say they're going to book as an intangible asset, that's $21.5 million. So I think that, unless the company disputes that, is approximately what the book value of the company is. Now, our understanding with respect to the classification of goodwill as an intangible asset is that that is subject to revisiting. There's a process under GAAP, as we understand it, that requires companies to determine if goodwill has been impaired. And I think impaired basically means, is the number real? Is the number, should we reduce that number based on the actual facts of operation? And to the extent that it is reduced, then there's the potential for a write-off. And any sort of write-off, I think, has potential implications for rate making. Now, it could be that the company will commit not to seek to recover the value of this intangible asset from customers. That's for the company to weigh in on. And if they do, I think that would give us comfort. Although I think we'd need to talk with People's Counsel to make sure that arrangement would be satisfactory. But as the record stands today, based on the filings made by the company, I think there is significant uncertainty about what will become of the $17.8 million intangible asset reflecting goodwill. And that's why we've asked the Commission to deny this transaction as proposed, or at least require additional information and analysis that shows that this makes sense and will not ultimately harm customers. I will stop there, and I'm happy to answer Commissioner's questions.
Okay, actually, Commissioner McLean, you have anything?
No, I'm good right now.
Okay, Commissioner Barbe.
So let me see if I can summarize your concern. It is that because the law says it would be the lesser of purchase price, which would include goodwill, or fair market value, which of course would be the result of an expert appraisal. So you're concerned that the the appraisers being chosen by the company will choose a bumped up value.
Not quite, Commissioner Barber. Our concern is that in this case, because the companies chose not to use the appraisal process under 6304, there is no appraisal. That section says, here's this appraisal process. Each company, the selling utility, the acquiring utility, can each hire an appraiser, do your appraisals, average the values, and that's the fair market value. That's essentially what the statute says. They elected, as is their right, not to take advantage of that statute and only to have a purchase price. We believe that in that circumstance, the statute requires that the purchase price be designated the rate base of the company following the transaction.
So wait a minute, maybe I'm getting this wrong. What section are they electing to use?
They're electing not to use Section 6304.
Instead, 306B. Okay, that's what I thought.
Yeah.
Which says it's the lesser of purchase price or fair market value. So I guess I'm not understanding your concern.
Well, Commissioner Barber, if you do not have, in this case, again, we do not have a fair market value because
Right.
we don't have the appraisals.
Right.
We have only the purchase price. And so the legal question is, in that circumstance, when you have a purchase price, you do not have a fair market value to compare it to. So you can't do that comparison. The lesser amount has to be the purchase price because it's the only number that's out there.
Well, it's the only number that's out there right now. Can we not compel an appraisal?
That's a good question. I mean, the statute makes it optional. I think the commission could decide not to approve the transaction and express openness to revisiting it if the companies do an appraisal.
Well, I mean, they're going to come to us in a rate case, and wouldn't it be at that point that we, as a commission, require an appraisal?
I think at that point, Commissioner Barbe, the horse is out of the barn. I think we have a legal effect here that under the statute, when you have this type of transaction, the rate base automatically, by virtue of law, becomes the lesser of the purchase price or the fair market value. So
and you're concerned that they will deliberately choose not to appraise the properties.
Well, that's what they have chosen. They chose not to do an appraisal in these circumstances.
Okay, thank you.
Yeah.
Commissioner Sushman.
Yeah, so I'm listening to this, reading this. It sort of flows that 6302 provides this subtitle is applicable to the situation that we're involved in, and then 6304, I read it to suggest that this is how you determine fair market value, and then going into 6306. B, you do the lesser of one or the other. They chose not to do fair market value. you could also read this provision to suggest that the intent by virtue of this language was to have fair market value. I guess I'm gonna ask the company when they come up, can book value be a proxy for fair market value? Because that is a number that we have, and if the intent was not to include goodwill in the rate base, you'll get your rate base through fair market value by virtue of the $21 million. So I guess if you can, I mean, that may be a way of getting to where I think you want to go, but with assurances to OPC that goodwill will not find its way into rate base. Mr. Shibas, would that get closer to where?
I think it would, Commissioner Suchman.
Okay.
And your comments just brought to mind one thing that I should have said before, which is that this legal question of what law applies. We're not saying that the statutes that the companies have cited, and that staff has cited do not apply. We believe that they do. We simply believe that Subtitle 6, Section 3 applies in addition. In other words, this is not an either-or situation. This is a both-and situation.
Right, but it would give OPC and would give me some comfort that goodwill will never find its way into rate base by taking book value and having that be a proxy for fair market value.
And one final thing, if I could add, the other thing that sort of, gave us some concern about, like, whether the purchase price will become the book value is a provision from the purchase agreement itself. And bear with me for one moment while I pull this up. This is page 4 of the purchase agreement. I have copies of this so that I can pass out if the commissioners would like. The purchase agreement defines capital expenditure. I'll wait till you have it in front of you.
Thank you.
So again, this is a page from the purchase and sale agreement, which is part of the company's application. And I want to direct your attention to the last
Actually,
paragraph.
Before you get,
Yeah.
For the company, this is true, right? This is part of your purchase agreement? Just so we don't-
I'll confirm and he can continue, but.
Okay, all right, fair enough.
So capital expenditure, I want to direct the commission's attention specifically to subsection B. Capital expenditure means any expenditure, excluding amounts not included in rate base, to acquire an entity, assets, or business of the acquired business, or to add to, repair, restore, or replace property, plant, equipment, or tools related to an acquisition of an entity, assets, or business of the acquired business. Now, we're not sure what that means, but the fact that it includes in the definition of capital expenditure, expenditures related to acquisition, suggests to us that this is not a clear-cut case of absolutely acquisition costs not ever making their way into customer rates. And perhaps the company can shed light on what the intent of this definition is.
So,
Yeah,
I agree that this is not completely straightforward, but in subsection B it says excluding amounts not included in rate base. So would that does not give you comfort?
Well, if the intangible asset, the $17.8 million goodwill intangible asset is not included in rate base, is that what this is talking about? I don't know. Again, this is just a question. This is not clear language. We don't fully understand how it would apply to this transaction. Now, Commissioner Suchman, to your point, if the company makes concessions regarding what, not only what the rate base will be following the transaction, but what the treatment of this $17.8 million asset would be, I think that would give a significant.
Well, if it's not included in rate base, then does it matter that whether we define how that 17 million should be treated? I mean, then it could just, I mean, it's not going to, it won't be recovered from ratepayers.
Well, that's assuming that not included in rate base means forever rather than immediately following the transaction.
Well, I mean, if we follow this subtitle, it's not in rate base. In order to get back into rate base, they'd have to come to us.
Correct. Agreed.
So then we could deal with it then.
Agreed.
I mean, we can't bind the hands of future commissioners. So, but I think having some clarity about where goodwill is, I think will benefit everybody. And so I'm looking forward to hearing what the company has to say.
And again, this is defining acquisition cost in some form as a capital expenditure. And usually, when companies have capital expenditures, they seek to recover them through rates.
Right, but if they're not in rate base, they have to come to us
Correct.
and get approval. Okay, thank you.
Commissioner Litton, any questions?
No question.
Mr. Barbe?
Okay, let's say for the sake of argument that they had elected to go through an evaluation, a appraisal of assets, and the independent appraiser found that the value of the assets were indeed higher than book value, which is a thing that could happen. What would be the position of People's Counsel in that instance? Would that make it a valid? Would you agree that that the increased appraised value over book value belongs in rate base?
Thank you for the question, Commissioner Barber. First of all, I agree that almost inevitably the fair market value will be higher than book value because when a company buys another company, they're not looking just at the balance sheet. They're looking at expectations of profit and all the factors that go into that, and that's how you get to goodwill. I can't give you a specific question about what our position would be without knowing that number and without having had an opportunity to file discovery about whatever those appraisals say, potentially cross-examine the appraisers if we thought that it merited an evidentiary hearing. So I think in terms of the operation of the law, yeah, if we got to the end of that process and the commission accepted that the fair market value as determined by the appraisals is the value, then yeah, even if that's higher than the purchase price, that would become the number.
So let me say it this way, just to use simple numbers. I'm the acquiring entity, and the book value is 100, and I'm going to pay 120, and I believe that the actual fair market value is 110, so I'm paying a premium over what I think the fair market value is. I'm paying extra because it's good for my business to acquire this subsidiary, okay? It seems to me that including the appraised value of 110 in rate base might be a reasonable thing to do, but the bonus that I'm paying above that of the other 10 should not be included in rate base. Is that kind of a fair way to look at this?
I think that's fair, Commissioner Barbe. And again, the formula in 6306 doesn't talk about book value. The only kind of comparison is between fair market value as determined by the appraisals and the purchase price, whatever that is.
I only brought up book value because Commissioner Suchman mentioned that, and I just wanted to clear the air with respect to whether that's a valid way of looking at things. Personally, I think that, well, you know what? I don't know what I think. I'll keep my mouth shut.
Anybody else? All right, so let me now turn to the company.
Thank you, Chair Hoover, Commissioners. David Bugelmans on behalf of Maryland American Water Company. From Maryland American, I'm joined by Ms. Heidi Wagner, Senior Manager for Rates and Regulatory Affairs at American Water. In addition, from Maryland Water Service, I'm joined by that company's counsel for the transaction, Mr. Carville Collins, as well as Mr. Steve Lubertozzi, a Senior Vice President of Regulatory Affairs for Nexus Water Group. The two companies would like to thank staff for its extremely thorough review and comprehensive buck sheet in this matter. We believe that between the petition and staff's buck sheet and all the attachments to that buck sheet, the record strongly supports approval of the joint application this morning. The wrinkle here, obviously this morning, is the last-minute letter filed by the Office of People's Counsel on Monday. I would like to note this application has been pending for 5 months. We responded to numerous data requests from staff during that period. OPC did not conduct any discovery or contact us at all. The first we've heard from them was the letter filed on Monday. We responded to OPC yesterday with a filing, but to summarize, it's our position as a legal matter that OPC is simply wrong, that the fair market value acquisition process under PUA 6301 at SEC applies to this application. As described in our response, the fair market value procedure only applies on, quote, agreement by both the acquiring entity and the selling utility. This language appears in both PUA 6304 and PUA 6307. So if you look at PUA 6304A, it refers to, or I can just quote it for the commission, on agreement by the acquiring entity and the selling utility, the fair market value of the selling utility shall be determined in accordance with this section. So again, on agreement by the acquiring entity and the selling utility. If you look at 6307A, that portion of the statute refers to the filing requirements if you make an application under this portion of the code. And again, it says, if an acquiring entity and the selling utility agree to use the process outlined in 6304 of the subtitle, the acquiring entity shall include all the required information required for the commission to make a determination. Without such an agreement, the fair market value procedure under PUA 6301 does not apply. I would like to note the General Assembly enacted this statute in 2018. Since then, the Commission has approved at least 5 acquisitions of water companies. Only one transaction, which was Maryland American Water's acquisition of the Severn Water System, used the fair market value statute, and that was by the election of both parties to that transaction. All other transactions were approved under POA 5202, 203, 205, 6101 without use of the fair market value statute or associated procedure. So we think that precedent is clear from the Commission that until this day, this issue has never been raised by OPC. The Commission's approved these transactions without invoking that statute because, again, it's our position it only applies if the parties agree to use it. And to be absolutely clear, the record confirms the parties to the joint application did not elect to use this statute. The joint application cites only PUA sections 5202, 203, 205, 6101, and we didn't provide any of the information required by PUA 6306 because that procedure is not being used here. Most importantly, and this goes to the heart of OPC's filing, because the fair market value statute has not been elected, PUA 6306B does not apply. Thus, the negotiated purchase price will not become the rate-making rate base of the former MWS systems upon closing. This has never been asserted by the companies. We have never taken this position. It was never an internal assumption. That was never the case because the companies did not elect to use that statute at any point in this process. Instead, as has been discussed today, Maryland American Water Company will record the depreciated original cost of MWS's utility plant and service as its rate base, not at the negotiated purchase price. For the avoidance of all doubt, and this goes to some of the Commissioner's questions this morning, the company would support the adoption of language in the Commission's letter order approving this transaction that states the transaction was not approved under PUA 6301 et sec. The company also supports, including language that clarifies the purchase price will not become the rate-making rate base of the former MWS systems. With respect to transaction costs and goodwill, we responded to data requests from staff as this application was pending that neither transaction costs nor goodwill would be recovered through rates, and we would support an additional condition to this letter order that states that. So again, we're certain that PUA 6301 does not apply. We think it's clear from the statute. We think it's clear from past practice. But to avoid all doubt, this additional conditioning language should address OPC's concerns. So we respectfully urge the commission to move forward with approving this joint application today, potentially with this conditioning language as recommended by staff in its buck sheet after its comprehensive review. I know there's been a lot said this morning, so I probably missed some of the commissioners' questions, but we're here to answer any questions, and thank you for your consideration this morning.
Okay, Mr. Linton.
Thank you, Mr. Chairman. Good morning. So you heard my question earlier to the technical staff regarding a post-closing compliance filing. Do you have any objection to that?
No objection, Your Honor.
Okay. All right. I appreciate some of the earlier language you've already offered to be included in our letter order. We also heard conversation and presentation from the staff earlier regarding your communications to consumers about this acquisition. The staff stated that you had actually done that. Have you done that already, or is that still pending?
Yeah, the company has not provided notice to the NWS customers. I believe that they're waiting until hopefully the commission approves this. But we did provide draft notices to staff as the application was being reviewed. So that is prepared. It's just the time is not right to provide notices.
Okay, so we can expect then that there would be some type, as part of perhaps as part of a post-closing compliance filing, that you could also produce information regarding the communications and outreach.
I think that's reasonable. Again, if you look at staff's buck sheet, I think those communications, at least drafts, are included, but we can provide further information as well.
Okay. All right, and I noted, the staff mentioned this as well, that the county executive from Harford County submitted a letter in support of this. He also cited plans for improvements, infrastructure investment, operational efficiency, things of that sort. Does the company present additional information to the county executive explaining how you were going to accomplish those things? And my goal here is to make sure that whatever it is that you've offered there, we're not just overlooking here.
So I am not aware of what was provided, if anything was provided, and my client here with me today isn't as well. Something we can look into. We just don't know the answer to that.
Okay, because his support appeared to hinge on the fact that these are things he was expecting that the company would offer. So he appears to expect that that's happening.
Well, I think the overall theme of the support letter is that Maryland American Water Company is a company with a strong track record, including in Harford County for its Bel Air system. So my read of it is it's more focused on sort of generalities as opposed to specific investments. But again, I just don't know what, if anything, was provided to him about any specific plans.
Okay. Well, thank you, Mr. Chairman. That's all I had. Thank you.
Mr. Sussman.
Okay, so let me be clear in terms of numbers. How much would be rate-based?
So, as I indicated in my comments, the company plans to record the depreciated original cost of NWS's utility plant in service as its rate base, which I believe
It's approximately 20.
Ms. Wagner's looking up the number here.
Okay.
Approximately 20.6 at the end of 24.
Actually, I do have a question. Okay. So you'll be next in line. in that other thing.
You mean in the after,
Yeah.
I apologize for the delay. We had to look up
that's
the
fine.
numbers. So the amount would be approximately $21,516,849.
Approximately.
Approximately.
No sense. Okay.
It's because the goodwill value we have is a rounded number, but it would be right around there.
Okay.
Yep.
And that would be rate-based, and you would make a commitment to that.
Correct.
Okay. And OPC's concern is that it may not be consistent with the statute, but if OPC, if you were to be able to reach an agreement with OPC that that's the number that would be rate-based, as opposed to waiting for us to issue an order, then we don't have to worry about whether it's consistent with the statute because you're just going to have reached some kind of consent agreement. Does that make sense to you? I mean, this is the number that you are proposing to rate base. This is the number that OPC wants to rate base. They're concerned that it may not be consistent with the statute, but if you're in agreement, then it seems to me that we don't have a problem. Mr. Shebist? Does that make sense to you? I mean, that's the number that you are proposing to rate base.
Yeah, I think substantively, Commissioner Suchman, that addresses our concerns.
Okay.
I think the question that we have is whether we can make that agreement under the statute.
But if it's just an agreement about, so you're thinking that the statute requires that 37 million is the number that gets rate based.
I think if we were to reach an agreement of the kind that you're describing, we would have to agree that the fair market value is this depreciated original cost.
Or you can follow along the lines that Mr. Bugelmans is proposing, which is that the subtitle doesn't apply. He just would go under a different provision of the statute, correct? Mr. Bugelmans?
That's exactly right. It's our position, and again, it's supported by, since 2018, multiple commission decisions, is that the fair market value statute is an optional procedure. We have not elected to use it, and therefore none of those provisions apply.
And I don't know that you necessarily have to even go down that path. You can just, if you're comfortable with his argument about using a different provision of the statute, know that you can come up with a consent agreement that takes care of your concerns and goes to where they want to go. I think then we have a win-win.
It could be a win-win. It's just what I'm hearing from OPC is that they don't believe that that's a possibility. I don't want to put words in your mouth. I hope they would think it is, but they've taken this position that the statute applies and there's no discretion. Again, we feel strongly that is an incorrect interpretation of the law, but I'm concerned about going down this path. We can't even acknowledge that.
Yeah, I'm not even sure that you have to. I mean, I think you can just come up with a number, and you don't have to base it. Well, I'm not going to tell you how you go about this, but I guess I'm not. I feel like you're both where you need to be. You can figure out a path forward.
And Commissioner Suchman, we certainly happy to discuss internally. I want to just note that the cases that council mentions, the ones that are cited in the footnote to the letter that companies filed yesterday, 3 of those matters were like acquisitions of very, very small water companies by an individual whose name is escaping me at the moment.
Yes.
Okay, you all know.
We know.
Another, the merger between Southwest and the predecessor in interest of Nexus. I don't think that's applicable because that was a merger between holding companies that didn't directly implicate any rate base at all. And then the last case is the one where they in fact used this appraisal process. So this legal question, what I'm saying, is really an issue of first impression, And we can certainly, spend more time with the statute and see if
Right. I two lawyers, and you actually know the outcome, so you can I think you can both find a path forward. It seems to me.
we're certainly happy to discuss. I can't commit to any sort of agreement without, today. Commissioner.
Right. No, and we wouldn't. Mr. Chairman, it just seems to me that they can kind of go back and find a way and, okay.
Commissioner Barbie.
Thank you, Mr. Chairman. Mr. Bugelman, so let me just say out loud what I think I heard you say, and you can tell me if I'm correct. Your client is willing to make a commitment to enter into rate base the depreciated asset value, in effect the book value of the acquired entities, and you are comfortable with us in our order stating that.
Correct. And we're also comfortable with the commission stating that this transaction was not approved under the fair market value statute, or that we're effectively stopped from asserting it was, to basically to avoid all doubt that that is a possibility that we could cite to that and then say that the purchase price should become rate base. It's never been something that's even been internally considered, which is why, there's been a bit of frustration here, frankly, because it's not something that was ever on the table. And we want to make, we're willing to make these commitments to make it absolutely clear. But again, going back to the legal point, the fair market value statute does not apply to this transaction. It was not elected. It's not really a legal possibility in our eyes. But if we need to do conditioning language, we would support that to
So
work it
again,
out.
your position is book value, basically.
Correct. Yep.
Okay, thank you, Mr. Chairman.
Commissioner McLean.
Morning, sir.
Morning.
So I understand OPC's position on 6302. There's no limitation on that in that statute saying this statute applies if the parties agree to the fair market valuation, correct?
You have to read the statute as a whole. I know it's a very legalistic argument, but
Section- right.
it is true in regards to this, because when you read these other portions of the law, it refers to an agreement to use this, this structure. I think maybe one of the drafting reasons why that was done was because potentially it was important to make it clear that this procedure is only available to water and wastewater companies as opposed to electric and gas companies, other types of utilities. So there's maybe an explanation for that drafting nuance. But you have other portions of the statute that refer to this as, if there's an agreement to do this, you have to use this procedure, you have to provide this information, and that there was no agreement here to use this.
All right, thank you, sir.
Staff would have one more comment if the other parties are done.
Juliana Bell, Deputy, Office of People's Counsel. Mark and I were just conferring about Council's offer to include as conditions to the approval of the transaction, the conditions that he previously stated. And I think that would be a more comfortable resolution. You wouldn't have to necessarily reach whether this statute applies or not. It would resolve our concerns. But we think it's a better resolution than a consent agreement between OPC and the water companies, because the commission needs to put its stamp of approval on that and make the conditions a record to the approval of the transaction. So, I don't know what a consent agreement would do. It would just be sort of separate. So, the other alternative would be to go back and talk further, as Commissioner Suchman suggested, come back with some agreement that then the commission would accept the conditions of, as conditions of its approval.
So, can you work with Mr. Bugelman's to come up with the conditions that you would like to see? So, and then share that with us so that we can include that in the order.
We can do that.
Okay.
Commissioner Suchman, yes.
Thank you.
Thank you.
And staff also would like to be included in that process too.
Yeah, no, I understand. But actually, before we get to that, so I guess I'd like to hear from staff your view of this. What's the correct law in this? Because, I mean, even though you didn't necessarily take a position on it, I guess I'm interested in your thoughts on it. And then secondly, I'm assuming you have no problems with the offer made by the applicant of additional conditions, so to speak. But if you got any thoughts on that, why don't you say that too? So.
That's correct. Staff would not object to Maryland American Water's suggestion that they include additional language in the order clarifying the amount that they would include in the rate base or not include. My understanding, or the staff's understanding, I should say, of the 6301 at sequence statute is that it was created as an incentive, a means of incentivizing water companies to buy other smaller water companies that might not otherwise, that these companies might not otherwise want to buy. And that it allows not only the value of the assets to be included in a rate base, but also allows transaction costs and fees to some extent that otherwise would not be recoverable. It also, staff agrees that it appears to be a voluntary mechanism that parties would agree to use, but it is not required of them. In addition, staff would say that we believe it would be a perverse reading of the statute to interpret it in a way that would increase the rate base by using an appraisal that could potentially result in a higher book value, and thus potentially increase rates to customers. So, but I believe that instead of attempting to interpret that statute now, and I do believe also that statutes need to be read in the context of the entire statute and in the context of the legislative intent. So that would require, I think, a further analysis and thought. But I think that the best solution now would probably be to include the language clarifying what would be included in the book value or the rate base.
Okay. So, actually, before we kind of conclude this, Mr. Collins, did you have anything you particularly wanted to add since you made the trip over here today?
Thank you, Mr. Chairman and Commissioners. Carville Collins for the seller, Maryland Water System and Nexus Regulated Utilities. And as Mr. Bugelman's mentioned, Steve Lubertozzi is here. He is Senior Vice President of Rates, Regulatory, and Legislative Affairs. We concur with the resolution that's been discussed here, and nothing to add there, but just for the record, just like most acquisitions since 2018 in the water industry, we did not elect to use 6-301 for this transaction. Just want to make sure that's very clear. We are available if any of the commissioners have questions. Thank you.
Seeing none. Okay, so here's what we're going to do. We're going to take this under advisement. I'm going to give the applicant an opportunity to supply us with any language that you would care to have included in any order that we issue regarding this request. I guess the question I have for you is, how much time do you want to try and work this out?
I think 2 weeks, Your Honor, would be appropriate. We can turn this around quickly. We'll work with OPC and staff. Yep.
All right. And I guess the other question would be, is there any other time constraints that we should be aware of regarding this situation?
There's no time constraints. If we're able to, excuse me, do this within 2 or 3 weeks, I think that's acceptable. Thank you.
Okay, so that's what we're going to do. So, all right, thank you.
Thank you.
The final item on today's administrative agenda is from TPE MD PR 53 LLC. Its request for expedited waiver of pre-construction CPCN conditions to permit installation of access roads.
Morning, Chair Hoover and Commissioners. This should be a less weighty item.
Don't speak too soon.
I'm Roger Austin on behalf of staff. On October 17, 2025, TPE MDPR 53 LLC, henceforth referred to as TPE or the company, requested approval for a limited waiver of all pre-construction conditions that the Commission imposed in authorizing TPE to construct its proposed solar project in case number 9755. The company is seeking this waiver for the sole purpose of allowing the company to install access roads to its proposed project site before December 31, 2025. The company has determined that these construction activities are necessary in order for the proposed project to qualify for the federal investment tax credit under the One Big Beautiful Bill Act of 2025, and also to ensure that the project is not later excluded on the proposed foreign entities of concern regulations. On October 24th, 2025, PPRP submitted a filing that notified the Commission that it supports the company's waiver request. Staff recommends that the Commission approve a waiver of all pre-construction conditions in the CPCN that was granted to the company to allow for the installation of access roads to the project site prior to December 31st, 2025.
Okay, any questions for staff? Seeing none?
Good morning, Chair Hoover and Commissioners. Sandra McLemore on behalf of the Power Plant Research Program. As staff indicated, we filed a letter indicating that we were not opposed to this, and that we also verified that the county had no concerns, and I reached out to Mr. Bugelmans, and he indicated that that was the case. And because of that, we do not have any concerns on this, and we recommend approval of the waiver. If you have any questions, I have today with me Ms. Rogers, if you have any technical questions as well.
Okay, seeing none?
Thank you, Chair Hoover, Commissioners. David Bugelmans, this time on behalf of TPE MDE PR 53 LLC. Joined by Ms. Franny Uhas, the Director of Development at Turning Point Energy, the developer of these projects. Appreciate the Commission's quick scheduling of this request and the party support. We have nothing to add at this time, but we're happy to answer any questions about the request or the projects.
Well, so without going down a rabbit hole, I mean, I guess I found this a little different, I guess, in this request to do access roads. I mean, what's the nature of this property that you need that?
It's really for the avoidance of doubt, Chair Hoover. So the definition of construction for CPCN purposes is very broad. It's defined as any physical change to the site. This is work that would be completed by basically the construction or the project owner, or not the project owner, the property owner of these sites. And it was effectively going to happen as sort of a matter of course related to the overall development. And when we looked at that and then looked at the definition of construction, we thought it was important to come to the Commission to receive clarity that this is acceptable. And then we positioned this as a waiver instead of arguing this isn't construction, because we didn't want the Commission to be concerned that you were opening the door for a bunch of different interpretations of different things not being construction and open up that rabbit hole. So it's definitely a unique request, but we're trying to be cautious with this and cover our bases.
Okay, and just to seal it, I mean, PPRP said it, and I guess you said it, that the county is okay with this. You've talked to this.
The county's okay. So we've confirmed this is permitted under, there's actually an active NDE mining permit. So this is authorized under that, under county permitting. So we're good to go from a permitting perspective, just trying to.
No, I understand that, but I mean, I hear enough from the counties about us shoving things down their throat, and so I just want to make sure that they're okay with this. So, all right. With that, I move we approve a waiver for all pre-construction conditions in the CPCN that were granted to the company and allow for the installation of access roads to the project site prior to December 31st, 2025. Commissioner McLean?
Aye.
Commissioner Linton?
Aye.
Commissioner Sushman?
Aye.
Commissioner Barbay?
Aye.
I vote aye. And with that, we're adjourned. And why don't we come back at noon to do